Hi, everyone. Thank you for joining us today. Today we have iEmergent on. We'll be covering HMDA data insights for the East Coast. I have Laird Nusuli with me today, and I will let her take it away.
I'm going to check with one thing, Sarah. Is this a half an hour or 45 minutes?
It is scheduled for 30 minutes.
30 minutes. Perfect. Well, that's good because I didn't plan for 45. Well, good afternoon, everyone. Glad that you guys are tuning in today to look at this data. If you've ever seen any of our presentations before, you'll know that there's a lot of data to cover, and really we could sit and look at this for hours. I mean, I'm a data geek, so at least I could sit and look at it for hours. But if you missed our first HMDA webinar that we did earlier this year, in that we reviewed, really what did 2023 look like, and how did things change from 2018 to 2023? And I'm just going to revisit those two national numbers just so that we get some a sense of where things are. And I want to make sure everyone can see my screen. Yes, there's a couple of things coming in the chat. Just wanted to make sure. Okay. Well, as we discussed the first time we looked at this, you can see that this is a chart showing mortgage loan originations, and that's total, so purchase plus refi, from 2004 to 2025. And this is loan units. As you can see, when we look at, we're talking a lot about how tough these last 2 years were, but that's really important to keep it in mind when you're thinking about that, how it looks in the long-term trend. So you can see here that this blue purchase, up and down and up. And, yes, it goes down from 21 to 2022, but really, we're looking at something close to that long-term trend line, which is really, 2008 to 2016-ish. So really this huge drop that we saw really was driven by refi. From a loan unit perspective, and also from even more so from a loan dollar perspective. It was interesting though, and the reason I wanted to show this is when I started digging into the East Coast, and that really is the whole Eastern Seaboard, all the way through the Gulf, and the only non-coastal, two non-coastal states included would be West Virginia and Tennessee. So that's what we're talking about when we're talking about the East Coast. But in any case, when I was looking at it, I was surprised, and we'll see it in a little bit, that the drop from 2021 to 2022, 23, 24, and 25 was far less pronounced on the East Coast. And I'm thinking, as I'm digging into that, thinking about why that is, I think a lot of that has to do with, the fact that excluded from this is California. A lot of the West Coast states really had a lot more refi. And you'll see when we look at the distribution of loans and originations by purchase or purpose, you'll see that the refi in on these East Coast states is much more stable. So we get into that East Coast, you can see here that I brought a map to show, what which states we're talking about. And each of these maps are what we call heat maps. So think of that as when there's a red state or red MSA boundary, when we see those, it means there's more loans or more dollars. And the blue is fewer loans or, fewer dollars. So you can see this if you look at these two different maps. You can see here that when you're looking at total loans at a state level in 2023, North Carolina and Florida are the two largest, or had the most loans. Whereas if you're looking from a dollar perspective, good old New York's, actually comes to the top, just because of not only having a high loan count, but having such high average loan sizes. So that's something to keep in mind as we're looking at this, that when you're looking at comparisons, there are two pieces of that. There's the loan unit and there's the loan dollars. And that loan dollars is driven so much by what average loan sizes are doing over time. But when I look at that distribution, and what I mean by that is how these totals play out by state, you can see here, if we look at the refi from a percentage perspective, the state with the highest percent refi is Louisiana. But if we look at purchase, the highest, purchase ratio or purchase percentage is Vermont. Home improvement 24, and this is, your home equity 21 is Virginia. And what's interesting about these is when, you really can't see, if you're looking at this big chart here, there really isn't a lot of difference in how this is, how loans are distributed in 2023. And that really surprised me, because when I dig into some individual markets, you can really see an increase in the home improvement and the other, when we actually see a decrease in the cash out refis. But you just don't see that trend in the East Coast quite the same. And so looking again at, is that the same? That's the same one. So if we're actually looking at those dollar numbers, so not just the visualization of that, you can see this, these are listed alphabetically. Then we look at 2023, we look at what growth looks like, and we'll first focus on, at a state level, what the total originations were by state for 2023. And you can see that Florida, 156 billion, and New York, 83 billion. So that is the total origination dollars by state, top to bottom. You can see the smallest is probably one of the new, Vermont at only 2.6 billion. And again, that's total origination dollars. But what I'm more interested in are what these growth rates look like. The first one here I thought was really interesting, because there's so much difference from state to state. And that's, what happened up or down from 2018 to 2023. You can see Alabama actually grew in dollars by almost 20%. Connecticut dropped, DC dropped, then, Delaware, Florida grew, Georgia grew, then we have, 3 states that dropped. So there's really not a lot of consistency about how things changed from a total dollars perspective. However, when you look at that same, these same numbers, but you look at just the growth from 2022 to 2023, you can see here that there is still a pretty big drop in loan originations from 2022 to 2023. Really significant, actually. So, 30 to 21. And where we saw that, like I was talking about that difference earlier, it wasn't so much in the drop here, it was in the drop here that just didn't mirror the rest of the country as severely. So same thing, if we're looking at just purchase originations, you can see that we have, again, this drop, and then even higher growth in Alabama, drop in DC. So it really fluctuated from state to state. And I'm sure that if we looked at this at an MSA level, we'd see that same level of difference, where some MSAs grew, some dropped, some grew in loan units, some grew in loan dollars. So again, all that has to deal with what property values are doing, and whether particular markets are completely built out. Is there room for growth? So individually, we always like to say that there is no single U.S. mortgage market. It's really a collection of, if you look at a census tract level, 88,000 different markets. But in this case, we're looking at these states. And if you look at the states and then you look at the MSAs and look at the counties, which certainly goes into this, you can see just how much difference there is from market to market, because every market really is not created the same. And there's the same, we looked here at the dollar count. Now or the purchase dollars right there. Now, when we look at purchase units, you can see that that drop is driven so much by loan size and not as much by actual changes in units in a lot of these states. Again, I thought that was interesting that we just, even though we saw big drops in some of these states at a dollar from a dollar perspective in loan units, there still is a drop, but it's just not as significant. So kind of moving on, looking at, as I mentioned, you can think about it from, well, here are states, right? And then you break the states out to the MSAs and you get a very different picture. Obviously there are, Florida, DC, the DC area, Georgia, Charlotte, they have bigger MSAs. And so you can see here, all of the light blue are the smaller, what I would call micropolitan areas in dollars perspective, and all of the ones that are really from that mid green to the red, those are the MSAs, it's the big MSAs. And it's no surprise again that when you're looking, you see New York, DC leading in it from a dollar perspective, and then from a loan count perspective, Atlanta, Miami, and still in this particular case, overall loans, New York as an MSA, not as a state. Because remember, before we were looking at the whole state, and these maps were just looking at the MSA. And after I get through the PowerPoint, I can go live and we can click on each one of these and get more detail on each one of the MSAs. So again, when I was looking at that, that loans and the dollars, what that really translates into when you really look at it is this is what average loan sizes look like. So in New York, some of the average loan sizes can be up to $1 million, whereas and same with this parts of Florida, all the way down to some of the rural counties where the average loan size is between $86,000 and $132,000. For again, this is all loans, not just purchase and refi, but total. So there again, looking at the same thing at it from a purchase perspective, you can see the loans, the dollars, and I don't know that I did there was supposed to be average loan size one too. Should be an average loan size. Nope, I didn't include that. So an average loan size from a purchase perspective is going to look really similar. Interestingly, though, as we start moving through this, I want to go to the lender type. So one thing that I always like to look at is what is that, as we look at who did the loans, what is the percent by state that is, that was done by bank, what was done by credit union, what was done by IMBs. And when I took this one apart, I looked at it not just from the perspective of, loan units, but actually applications. And what I was looking at here is, 4 different states. What's the count? How many banks are there? And then what percent of all apps were received by banks, what percent by credit unions, and what percent by IMB. I looked at it like that, and then I also went deeper and looked at it by race and ethnicity, and that's an interesting thing we can dig into later, or if you have any more interest in that, because that varies significantly between different race and ethnic groups. So anyway, when I was looking at that, I thought it was interesting. Some markets are bigger IMB markets than others. Some are bigger bank markets. But it really depends on the state. So you can see here, if you're looking at Alabama, 60% of all apps, purchase apps in Alabama were from IMBs. 6% to credit unions, about 33% to banks. Contrast that with, say, Massachusetts or Maine, Mississippi, where 40%-ish, 44%, 41% of the loans were going to banks, or applications, I mean. So there's a lot of difference. Again, I think a lot of it is not just about the split between bank and IMB, but also, you know, how prevalent are credit unions in some of these markets. So again, you guys can look at this in more detail when you get the deck, but I think this is a fascinating way to look at it. And when you look at it over time, you can see that it's pretty stable, or it was pretty stable from 2021 to 2022 to 2023. There's a slight uptick in when you're looking at purchase with IMBs, but overall, it's pretty stable in terms of who is doing the business, and you know, how many of them, like, even if it looks like from account perspective, you know, 50% or more are banks, when you actually look at the apps in terms of loan units, or, you know, actual, you know, loans closed, you know, a much bigger percent of that is going to IMBs. So another thing that I think is a really interesting thing to look at, and that's, you know, as we dig in and see, okay, who's doing the lending? I spent a lot of time state by state and MSA by MSA looking at how many, you know, what is the coverage by race and ethnicity. And I didn't go over this in our in the last webinar that we did nationally, because this isn't as important nationally. But what this chart is showing is quite a bit. It's indicating here, and I was looking only at purchase. If you're looking at all purchase, you know, this is the number of lenders that did at least one, took one application in that state in 2023. So, you know, there's a huge variation based on the size and really the density of the state. And then we created what I call the app per lender ratio. So that's what we're looking at. If we look at the total apps, the total number of lenders, it's the division of that. It's how many apps were there for each lender. So in this particular case, in Alabama, it's 116 apps per lender, whereas, you know, DC 25, and so on and so forth. Then I looked the same thing for, we call it our LLR, our loan per lender ratio, and you can see that too. And I always think this is interesting, because if you are looking at the competitive landscape of a market, whether it's a state and MSA, it's interesting to see how many lenders are competing for how many loans, and, you know, looking even deeper, how many lenders, you know, what percent of lenders are, or what percent of share is captured by, let's say, the top 5, the top 10 lenders. But I took that a little bit deeper, and I started looking at the same thing, and I looked at all purchase loans, but I looked at Asian, Black, and Hispanic specifically. And you can see here that if I follow that same logic, you know, you can see that when you're actually looking at Asian lenders, only 274 took at least one app. Only 403 lenders in Alabama, you know, received an app from a Black applicant, and only 296 from Hispanic applicants. And if you go down that path, what this actually tells you, you know, you can look at the apps per lender, all of that, but what's in this red box is what I think is disturbing and something to keep in mind. That percent that I calculated there, that's the percent of lenders who did not do even one loan with, you know, Asian, Black, or Hispanics. That's like, those are, you know, in a lot of these cases, that's more than half. So when you start thinking about, you know, that home ownership gap, and then you look at this, you can see that lack of coverage isn't just at an individual lender perspective. It's really that there are a lot of lenders that are not reaching out yet, you know, accordingly. Now, granted, there are some rural counties in, Maine and Mississippi, where you're just not going to have a lot of activity from, BIPOC households. But a lot of these states are some of the most diverse in our country. Florida, Georgia. There really are, I guess, hot spots of that type of opportunity. For example, if I look at, how does it look from the perspective of both counts and percentages, where is the Asian activity at an MSA level? And you'll notice too that when I calculate and show the map, when it is, when we're looking at race and ethnicity, it's much more helpful to look at it from a MSA level versus state level, just because there's so much variation between the metro markets and the more rural areas. But you can see where the concentration is. So this map over here is looking at, which markets had the most, what we call penetration rate, the greatest penetration rate of purchase loans. So, you can see some of these different markets, the most, I guess you'd say, concentrated have been, between just over 20% of the purchase loans were to Asian households. Now that's going to look really different when we start looking at the West Coast. But then when you look at the actual counts, you can see that that just the pure size of New York, DC, Atlanta pushes it to the top, Charlotte. And so that's just, I always like to look at this difference when you're looking at how, what are the best markets for race and, for diverse borrowers. Look at both penetration rate and look at counts. I don't usually look at the dollars as much, just because, when we're really thinking about closing that gap, all loan sizes are really important. If you move to the next thing and we look at Black borrowers, this is probably no surprise, very much concentrated in the Southeast. And then you see here also by, when we're looking at count, you can see that some of the same markets pop up. But, just again, talking about housing equity is important, but also talking about growth. If you look at Atlanta and Charlotte and DC, more than, if we're looking just at Black African-American loans, more than a quarter, and up to even 33 and above, some of these big markets, if you're not working with these borrower groups, you're missing out on a ton of opportunity. So, a lot of talking about HMDA is talking about what happened, but a lot of this is also about, how do you take this information and start thinking about it from the perspective of what's going to happen next year? How are these things going to shift? What type of opportunity did you miss? So that's, again, kind of as you're looking forward, this is how this can be helpful. And then same thing, if we look at Hispanic, probably no surprise that, concentrated in, the New York, DC area, but then big bulk of it in Florida. So again, if you don't have a strategy for working with Hispanic borrowers in Florida, growth is going to be difficult, because, when we're looking at that, at that 2018 to 2023 map, and it might look disheartening, the best opportunity for growth is still going to be the diverse households and younger households too. So, diverse, and then, sort of, younger generations are starting to be we started seeing that increase in 2023, and it's just going to continue. Going back to sort of, again, at the state level, I did a quick analysis looking at denial rates and pull through, and just all the different things that you can look at when you look at HMDA. And you can see that in every state, with the exception of West Virginia, where it's equal, the non-Hispanic white denial rate, which is the purple, is either somewhat smaller or lower or significantly lower than the denial rate to, you know, all people of color, all households of color. So, you know, obviously South Carolina, 25% denial rate to people of color, only 11% to non-Hispanic whites. And this is all purchase denials. When you look at the same thing, so I take this green bar and kind of spread it out between Asian, Black, and Hispanic. You know, obviously there's Pacific Islander and, you know, other race and ethnicities. The numbers are small. So that's why I tend to focus on, you know, the big main, the largest three cohorts. But when you look at this, you can see kind of a similar trend. Asian households have, you know, much lower denial rates than Black and Hispanic households. So again, 2023 HMDA didn't really show that we made much improvement in the perspective of pull through and the home ownership gap. There was a slight increase in the number of apps going to households of color and low to moderate income households as well. But the denial rates and sort of the stickiness of, you know, some of those indicators, it didn't change much. So, so really, I'm looking at the time and it's, you know, almost 2:28. You know, that again, there's a lot of different ways you can slice and dice this. You can look at it by loan type. You can look at it by income. If any of you have any interest in digging in more, you know, beyond the state level into the MSAs or counties, you know, let me know. I love to look at this information. All of the pieces, you know, again, whether it's the applications, it's the pull through, it's, you know, who are the top lenders. You know, I'd love to give the top lender ranks, but it's going to be different in every MSA. And there's so many in the East Coast that I decided not to include, you know, the top 25 lenders. But if that's something you're interested in, that's an easy thing, an easy report for us to run. So, you know, feel free to reach out to me and, you know, I can go into more detail. Just don't have a lot of time when you only have a half hour. So, I don't know, Amy, did you, or Sarah, did you see any, questions?
Yes, I do. I have one asking, any recommendation for drilling in for your individual credit union?
So, yeah, so there's a lot of, I don't know who's asking it, but we, you know, if you were interested in looking just at credit unions, you know, I'm happy to send those, you know, those market share. Obviously, credit unions are, I think they're a growing and really important, I think they're going to be a bigger part of the sort of the landscape as time goes on. In fact, there was a bump in credit unions overall from 2021 to 22 to 23. The one thing that we did see that credit unions don't do as much of, but banks, you know, really when you're looking at the home improvement and the HELOC and you know, home equity loans, that's where the banks are keeping their overall market share, because banks have lost share from 2022 to 2023. Credit unions stayed similar. But as you go into this purchase, you know, we're going to have a purchase market again. And when we're looking at that, and we know that there's a lot of pressure for what I would call community lending products, credit unions are really well positioned to you know, to work with their communities. You know, and they can be small and they can be, you know, big, like we've got a couple, you know, like Michigan and Boeing, but then there's, you know, Penn Fed, lot of big ones. And you know, what their share looks like really depends on, are they a big player in a small market, or are they a big player over, you know, across the whole market or the whole US?
Thank you. I will definitely make sure anyone who has questions is connected with Laird after this call. I know she's more than happy to walk you through anything we didn't get a chance to cover today. We'll also be sending out a follow-up email where you'll be able to view the deck, the recording. You can access it on YouTube and our podcast. I'll be sharing Laird's contact information there as well. I did also drop her email in the chat. You can let either of us know if you have any questions after the webinar. Also got a question on if there will be another webinar for Central and the West Coast. There will be. The Central edition will be on July 16th at 3 p.m. Eastern, and then the West Coast edition will be on July 23rd at 4 p.m. Eastern. That will be included in the follow-up as well.
The reality is we need an edition for each state to really
Yes.
dig in the right way. You know, if any of you are interested in listening to the other ones, if there's a specific thing you want me to cover, I'm gonna almost by default always cover race and ethnicity because it's what I'm most interested in. And I think it's a big part of growth. But if there are other elements of the HMDA data that you want me to focus on, also just let me know that. I mean, the point of doing this is just to share information as it comes in. So always open to suggestions.
Thank you, Laird, and thank you everyone for joining. We will be following up via email, and please let us know if you have any further questions and join us for those Central and West Coast editions as well. All right.
All right.
Thank you, everyone. Have a great day.
Yeah, do you need me to send I didn't put a lot of commentary in that. Do you think it's okay to just have the